Hey, what's up, everybody? Welcome back. Taking a look at the portfolio on the day, the markets were down 800 points. At one point, we were actually down almost 1100. I think the low was about 1075. I was watching it kind of intermittently. I worked last night, so I watched a little bit in the morning to see where we were at. Went to sleep, woke back up like around in the afternoon, like around 2-ish. And I could see that the market had sold off, which is okay. I kind of expected it to. Looking back at the chart, I kind of expected the market was going to have a bit of a pullback at 29K, as it's kind of around where we had topped out. We had quite a bit of a pullback, and of course on high volume, which is something to look out for. You want to see that if that big volume continues, then of course the market is going to continue to come down, which I hope. I hope that it does. I want to see if we actually do a retest of that 27.5 where we bounced off right here. See if the market, we did bounce off of the moving average, and I'm hoping that the market will either maybe come down and bounce, or hopefully the market will come down and I can buy some cheap stock. But overall, I mean, the markets were down. The Dow was down 2.78. The Nasdaq was down 5%. Most of the sell-off was in result to tech. There was a big pullback in Microsoft, Tesla, Square, Facebook, Apple, etc. Like it was mostly tech-driven, the sell-off. There's a lot of selling going on in tech, and kind of the market followed suit. The spiders were down 12. Like I said, Nasdaq down 5.23, 3%. But the portfolio actually held pretty strong. I was very surprised that barely took any. Portfolio was just like 800 sell-off. Only down 0.73 for the day. And of course, most of that was from tech. Most of that you can see from the 1 day was from tech. So in my small little risk portion of my portfolio, I do have a portion for like tech / entertainment. And those are just kind of like some of your Disney, Apple, Google, etc. Like the very well-known sort of tech / entertainment industry. So of course, the most of that was from there, and there was a little bit of selling from Play, right? Because Play, certain stocks are just going to sell off. Right? Play sold off. We're actually up on the day, really well in Play. Hit over $20, the high of the day in Play. So this is Dave and Buster's. I had been talking about Dave and Buster's way down here, and so kind of overall, I think I was up almost 500 in Play. I'm still up. As you can see, I'm still up 323. Basically, that whole portion of the portfolio is doing quite well, except for Wells Fargo, man. I'm like, Wells Fargo didn't move. That was another thing I was watching. On that 800 to the downside, Wells Fargo was just like down 5 cents. So Wells Fargo was just like, ain't nobody buying me, ain't nobody to sell. So kind of the stock has kind of been trading sideways for quite some time. We did move here. We did have a really big, nice move back here in June, all the way to 34. So I'm looking to see if Wells Fargo, or if any of these banking stock, Wells Fargo is just like the sleeper. I'm not sure which way it's going to go. Obviously, I'm long, so I'm hoping it's going to go up. But we'll just have to wait and see. So in talking, like I said, in terms of the portfolio play, we were doing fairly well. I think we were up almost 500 of the day before the market kind of Peter Panned off the edge. And that's all right. It is what it is. There's always going to be pullbacks in the market, and of course, as you can see, the risk portion of this portfolio is doing fairly well. But again, the primary purpose of this portfolio is for the dividends, right? So that's why most of my portfolio actually am very underweight currently in my portfolio for dividends, and of course I'll be adding more to it this month. But I'm really hoping to see in terms of the market, or at least in terms of my portfolio, to see if we get maybe like a 10% pullback. 0.71, people are just like, oh, we're gonna all pile all in. Not really much of a pullback, at least in terms of my portfolio. I'm not really worried about, this is the pullback, let's add in some more money, unless maybe it was into things like Apple. Apple had quite a bit of a pullback, but not enough for me. I'd rather see Apple at least pull back to the hundreds, more comfortably to about 88 before I decided to dip my toe in. So I am along a little bit of Apple, not really all that much. It's just there for like a little bit of growth in the portfolio. You always want to have a little bit of growth in your portfolio so that you can take that money, dump it into your dividends. The dividend stocks are typically going to trade fairly sideways for the most part, which is why you really don't see much of them. And again, there are stocks in my dividend portion that don't pay dividends, like for example CCL, right? CCL finally, did it actually did I go back negative? I was actually finally up in it, yeah. So we went back negative, but actually up on the day on Carnival Cruise. It's like, and the weird thing too is that certain like it seemed like a little bit of the like Simon Properties, certain stocks that I was kind of surprised that people were kind of gathering into, like Verizon. Not so much of a sell off into like a ladder, which usually when the market has a down day, like ladder's just like down like 4 or 5% on a down day. Ladder just like almost untouched, on the day. People just like, we're not going to sell this stock anymore. It's not going to sell this stock anymore off. So things like LTC, real estate actually looked like it had a fairly decent day, along with, for example, Carnival Cruise, Norwegian was up. So I was kind of surprised to see a lot of those stocks that have typically been weak, especially when the market sells off, that were even up on the day, surprisingly. So you look at things like CCL, right? CCL up 87 cents, Norwegian Cruise Line up 64 cents. Probably Royal up $1.30. God, I should not have sold that. I should have kept it. I sold it like 61, thinking it was going to sell off. And as soon as I was going to sell, I was like, I should have held it. But it is what it is. I still have quite a few plays, and I ended up rolling that money over into play anyway, so it didn't matter. Even play on the day had a little bit of a sell-off. It was actually up $1, up over $1 on the day, and then it sold off at the end of the day. But still going to be holding on to Dave and Buster's as I do like it. In terms of the portfolio going forward, I was going to add this new stock that I kind of heard of called Chewy. Chewy, the company, is kind of, from what I've read about it, and it basically looks like the Amazon of like dog and pet food, like pet food, like treats and stuff like that. Like if you're a pet owner, Chewy seems to be like the Amazon, like the one-stop shop for basically anybody who owns dog or cat, etc. And the chart actually doesn't look that bad. It looks like it's of course had a sharp pullback, because it basically had a nice huge run up. So I'm looking for quite a bit of a pullback, maybe back into the 50s. I might nibble here at 60, but I'm really looking to add to it like in the 50s. It did have some fairly surprising earnings over the past couple of earnings, where I guess it did beat estimates, and it's actually increasing in revenue. You can check it out here on Seeking Alpha. You can look it up. There's quite a bit of information. It might be something I might be looking into. Chewy's, I don't know. Maybe like that new stock that kind of runs up. But for the most part, in terms of the portfolio surprisingly actually holding up pretty well. And I am hoping that the market is going to pull back a little more. We are seeing the futures for tomorrow already showing down 92. As they say, Asian markets tumble as tech sells off continues, and I am okay with that. Sell off all that tech, because I really don't have a lot of tech in my portfolio, because most of my portfolio is designed for income, right? So I'm really trying to build up the passive income from the portfolio, and we're doing quite well. Like I said, by the end of the month, I'm hoping we're going to get this to about 17.5, and of course by the end of the year, we're already in beginning of September. By the end of the year, I want to get the dividends to 20K, at least 20K, so that I'll have that passive. It'll be about $115 a month in passive income that I'll get every single month, averaged out over the 12 months, which of course will just roll right back into the portfolio. So that's basically what I'm utilizing this one. So I don't really have, outside of like my tech sector, Prudential is in my, even though it does pay a really solid dividend, but for some reason I stuck it in here. I probably should have put it over there in my, probably should have put it here in my dividend play, as Prudential pays, my God, I can't speak, pays a pretty solid dividend. We recently had one of $1.10, and they're looking pretty solid, much better than Much better than Wells Fargo, that's for sure. I should have just rolled that money right out of Wells and right into Prudential, which I probably would if I see Prudential maybe dip back down to like 64s. Might roll that money out and put it in here as my. I'm really the only reason I'm holding on to Wells Fargo is for the upward play, and that's if it's gonna go. That's if the markets are gonna go up. But for the most part, banks aren't really doing anything. Banks are not really doing anything. Bank of America, kind of right there. ORI, which is one that's in my portfolio. Kind of also trading sideways. This one also does pay a fairly decent dividend. I held this stock for a couple of years back in 17, 18, and 19, and then subsequently sold it in the middle of 19. So I bought it back, but I bought it so late. I bought it back so late. But you know me, I always love my charts. I always pay attention to the charts, which is what I particularly talk about. So when I see the market reaching a certain area, I'm like, okay, there might be a pullback here. We should see a bounce here. Oh, there wasn't a bounce here. Where's my next area that I should be looking for support or for resistance? That I'm not caught off guard. I'm not just like, why did the market sell off? And I'd be like, oh, I can see we came to a resistance, and we had volume, right? We had volume. So typically I don't really pay attention too much to the news because they'll just kind of like attribute it to whatever. They'll be like, oh, the numbers were, they said the numbers were the jobless numbers. It came out to like 800 and something. And they were like, oh, better than expected. And then throughout the day, they were like, oh, yeah, those jobless numbers. That's what caused the market to fall. And I was like, well, but wait a minute. You said it was good pre-market, but now it's good. Oh, now we're talking about it during the market. I really don't pay attention to a lot of that commentary nonsense. I typically work with volume, right, and support and resistance to let me know when a stock seems to be either oversold, and then I'll watch for the volume, or I'll watch for the double bounce, and then either add to a position. Which is one of the reasons why I had gotten out of GPS. One of the reasons why I had gotten out of GPS was because it looked like it was showing some weakness here, and of course it showed weakness previously here in the chart, and unfortunately it did go a little bit higher. But I was looking at it and I was like, I want to get some puts. I wish I would have done it. I wish I would have got some puts. I was going to get some puts on Robinhood yesterday, and I just didn't do it. And then boom, then the market's probably going to sell off again tomorrow. It is what it is. It is what it is. What can you do? But looking forward to finishing out this portfolio, getting to my financial goal here for the dividend account. Of course, for those who don't know, I designed this account predominantly for passive income, right? Primarily for those dividend plays is really what I'm interested in. And of course, there's going to be some capital appreciation, and it's usually going to come from the risk portion of my portfolio. And of course, by the end of the year, I should be caught up. There's just some deals that are out there. Some of the dividend stocks are a little bit higher than I would want them, which is why I haven't put all the money into my dividend portion. But I will definitely be getting to that. It's just a little bit of an update. I'm going to be adding some cash next week, or I should say I'm going to be adding a little bit more cash next week. I'm hoping that we're going to see, like I said, I'm hoping we're going to see a little bit of a pullback. More importantly, I want to see a pullback in the portfolio. 0.73 for me is not going to cut it for me to be like, oh, I need to dump in more money and get in cheap stock. It's just not going to happen. But anyway, I'm going to leave this right here. This is longer than I expected. Just a little bit of an update. We'll see what the market does. Like I said, I'm looking for a snapback from about that 27.5. I would look for the market to roll back down to, maybe we might even see a pause at the 28 and then a roll over to 27.5. And I'll wait for a snapback, because that's typically where I'm going to be adding money to the portfolio, is when I see the market basically come down to here. I might put in a little bit more. And then if we do roll, we're more than likely going to roll all the way down to 20, like that 24.7. We're gonna have to wait and see. Again, I don't predict what's going to happen. I just basically watch it all. I just watch it as it's unfolding, and then I plan accordingly. Okay, thanks for watching, and I'll check you out next time.